to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. And today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. This is my brief bio. Disclosures are very important. If you're new or you haven't seen this slide before, I encourage you to visit optionsclearing.com so you can understand the risk and suitability associated with trading stock and options. I'm not a financial advisor. I'm here to show you what I do in my own account based on my own risk tolerance level for general education and information purposes only. Again, trading psychology is important. We have level of uncertainty is elevated, right? If you use VIX as a proxy, we're above 2021 level on VIX. We have FOMC decision, we have geopolitical risk, escalation in Middle East, debt ceiling, tariffs are coming due on July 9th, I believe, that initial 90-day unilateral tariff on, on a lot of countries, Canada, European Union. There are negotiations at G7 summit. Trump left. Didn't seem like they made any progress, and July 9th is not that far away. So a lot of uncertainty in the market. VIX is elevated. We have VIX expiration today, so expect more volatility. VIX is expiring. There are a lot of contracts. We've seen that gamma in SPX and VIX. So we have expiration today. Juneteenth, the markets are closed tomorrow, and then equity expiration on Friday with a lot of contracts expiring exactly at this level, right? 6,000 level in SPX. So expect, kind of open field where positive news will propel the market to the upside, to the all-time highs, and negative news, whether it's FOMC meeting or debt ceiling or beautiful bill, could push the market lower. So the idea of dichotomy of control is that, since you don't know exactly what's going to happen in the next week or so, very important to look at how many positions you have and position size, right? What is your drawdown and risk management? So cash, I propose to start raising cash, right? You can close some of your long positions. Maybe you want to put a spider's put spread to hedge your positions, but I would decrease your overall exposure to market, right? You can look at the portfolio delta. You can look if you're trading options, or you can just look at, how much cash you have in your account. So I would propose to raise your levels of cash, especially after the strong rally from April's lows. So raise cash and portfolio drawdown 4 positions, 2.5% of account value per position at risk. 4 positions, I think, straightforward. I encourage you to keep a journal, right? So document all your trades before you put on a trade. Have a checklist if you break in any of your cardinal rules. And in terms of cash and number of position size, I propose not to break those rules, or at least break them very rarely. And then you grade yourself after the trade. A and B, if you never had more than 4 positions and your position was never down more than 2.5% of your portfolio, then you give yourself A and B, right? If you were down more than 2.5%, then grade yourself C and D, right? Sometimes markets cooperate, sometimes they don't. So, and the goal is to have more, 90% or 95% A's and B's, right? That way you don't get caught off guard, right? If there is, market volatility picks up and the market is going in different direction. Good morning, Elmark. How are you? So 4 positions, straightforward. 2.5% account value per position, right? Position size is the most difficult. Even if you trade it on the floor of CBOE exchange for past 30 years, it's still, there's a prospect theory, emotional component. So it's very difficult, right? But it takes a lot of training and discipline. But I think keeping journal and kind of looking over your past trades when you did well or when you broke the rules, I think that helps to kind of internalize this information and follow these rules. So 2.5%, market just open, heard the bell, 6,000 level, right? We're kind of we reached this level on May 19th. It's June 19th, right? Almost June 19th tomorrow. So in the past months, we were slightly higher or slightly lower. Nothing has changed, right? And it could be coincidence, or it could be, again, this gamma delta positioning. If you look at the spiders, the gamma flip is 598, delta flip is 598. If you look at the SPX contracts that expire, and actually I'm looking at, I think I'm selecting Friday's expiration and July expiration. As you can tell, most of the gamma and delta expires on Friday, and today is VIX, so these contracts are going to start expiring. And July is still relatively small, only $20 billion in July contracts in SPX. But in terms of level, still 6,000. Oh, I removed June 20. So June 20, 27, and July 18. Okay, let's do this again. It's still 6,000, right? It's still 6,000. Not as much as in June, but this is kind of acts as a magnet for now. So since a lot of the contracts will expire, we could break to the upside, one standard deviation, and by end of July, we could be at 6,200, right? End of June, end of July, 6,200. And negative news, one standard deviation moved to the left, around 580. And that would be my thought process of how to determine the, if you don't like day trading, right? I would use 5,800, right? That's a little bit more conservative. There is a gamma flip at around, if you look at SPX, I think it's 5,900, right? So I would use 590, right? I would use 590. So 590 is your support number one, right? And then 580 support number two. 580 support number two, right? So if you're aggressive short-term trading, you're looking at this week low, last week low, then 590, right? So it's about 10 points, right? So the risk is 10 points here. If you're a little bit more conservative like I am, then maybe 20 points on S&P, SPY, using S. Russell, welcome back. FOMC, happy FOMC day, happy Juneteenth. Tomorrow. What else? Okay, and then average account is $10,000, right? So 2.5%, $250. I think you said just guidelines, averages. Obviously, if you manage a large portfolio, that could be maybe 1% of your portfolio. If you manage a smaller portfolio, maybe 3%. But universally, if you have a drawdown of more than 20%, it's very hard to recover. Right, you're getting emotional. You trade based on your feelings, not based on your this. So you want your drawdown to be less than 20%. If you start, I propose 10%. Right, and then you can, as you get more experience and more confident, then you can start taking more risk. Right, usually it goes the vice versa. Right, you start trading, you're taking a lot of risk, and then as you get more experience, you take less risk. It's hard to kind of, if you can take my word for it, then I would. That should be the strategy. But if not, then just at least try to learn on your mistakes, and analyzing your journal can help that. Right, so $10,000, $250, and then you just divide 250 by 10, so you can maybe buy 25 shares. Still big exposure on $10,000, 25% of your portfolio in a trade, right? So we're talking about short-term aggressive trading. If you're thinking about weeks, months, then this would be maybe only, sorry, this is 25 shares, right? 25 times 10. And this is maybe 12 times 10, right? Half as much. So those are the levels, right? Any questions? And as you can tell on bar chart, in terms of flip point, right? 5931. So 5,900 on SPY. SPY it's a little bit higher, but I think I would use 590, 5,900, right? Nice. I don't know why the gamma is high at that level, but 5,900. So the green line basically means that dealers are forced to buy if the market pulls back. They're forced to sell if the market rallies, and that provides kind of a gradual grind to the upside, right? If we drop below 5,900, that could, the gamma becomes negative, and that could accelerate the move to the downside, and that's where you can get to 5,800, 5,700 on negative news. Any questions on the market? All right. Okay, looks like I got filled on JP Morgan. All right, so let's look at JP Morgan. So right now the goal is to look over your, June positions. I propose to close all your June positions. You don't want to get assigned unless they're way out of the money. And then concentrate on July positions. And again, look at your exposures. So you can find it in Dynamic Power Trader on Yellow Tunnel. If you look at the orders, I did get filled on JP Morgan, I believe. No, it's gone. So okay, I don't know why I don't see the order. Let's see. So, or on Tradespoon, if you look under Elite Orders, did I forget to put JP Morgan here? No, I have JP Morgan orders. Huh. Let's see. Technical issues again. Okay, that's not good. Traders log. Okay, so I mean, you should get text message, and JP Morgan is now filled. Not sure exactly what's going on with orders, but we'll review shortly. But according to my brokerage account, let's just verify this. Trade order status. Yeah, so I got filled at $3.90. So I'm out of JP Morgan. Again, banks, industrials, some of the momentum technology names, semiconductors, right, have been leading the market. And you can see they're continuing to grind higher and outperforming the market. So looks like it finally resolved itself to the upside. Again, if you want to, you can roll this position into August. Because it looks like JP Morgan is trying to break out. I mean, we have FOMC decision. Banks are sensitive to interest rates, but if this a confirmed breakout, next level is 280. So you can either roll into August or roll the strikes higher, right? Take the profit in the current trade and then the roll strikes higher. But at this point, I'm out of JP Morgan. Let me know if you have any questions. Maybe it's because of that firewall issue again. Just try this. And I do get positions. That's interesting. That's interesting. Okay. Never a dull moment. Okay. But anyway, so I'm out of JP Morgan. Any questions on JP Morgan trade? Okay. So let's continue on. So JP Morgan continues to grind higher. General Electric looks like found support after consolidation. We're not making new lows, but again, this is, if the market continues to go higher and breaks above 6,000, then General Electric should rebound. If market pulls back, then General could break down. There are tariff negotiations, right, on steel. This is how it started. So I think Canada proposed if they spend more money on military, then remove the 50% tariffs on steel. and aluminum, and GE I think is caught in those news, plus it's overbought. So, but for now it's kind of still recovering. Let's see the positions that this guy like. Okay, so I still have General Electric. This is July contract, and I think this is the only July position now I have, right? So I closed JP Morgan, I have General Electric, and I would encourage you to kind of, because of all the risk with geopolitical risk, tariffs are due in July, just maybe reduce your exposure, especially if you have option contracts, right? That expires June, July. This is the time to start thinking about reducing some of these positions. General Electric, I still, so that's the last July position, and then Microsoft is August position, right? Microsoft is August. Let's look at Microsoft. Microsoft continues to grind higher, right? Still consolidating, but it's kind of a slow grind to the upside. It's in the money spread, so now it's just a matter of time decay and looking at the theta. So still on Microsoft. What else? Let's continue on with the other position. So I went through GE. FCX, right? Let's look at FCX. Copper prices continue to grind higher, right? Tariffs, uncertainty in the market. I mean, copper is usually proxy for, industrial expansion, right? But it also kind of caught in between the tariffs, right? So you kind of following the tariffs and economic activity. So for now, copper is consolidating flat, and FCX is also consolidating. But again, influenced by macroeconomic data, and especially interest rates. So expect copper, gold, silver, banks, regional banks, small caps to move after the interest rate decision. And platinum continues to outperform, right? So you can see platinum prices making new highs. So John should be happy, right? Not a lot of volume, that's the only problem, but nonetheless, platinum continues to grind higher. Same could be said about silver. So it cleared the overhead resistance, and now it's all-time high, right? So it's a multi-decade highs. So precious metals uncertainty, right? This is one way to hedge against the uncertainty. So silver is higher. I do have a silver position. We talked about Microsoft. That's about it, I think. Oh, MPC. So oil prices should be in profit accelerator. Let's see. So I did trim half of the position on MPC. So, and we had Valero Energy yesterday. So Valero Energy is outperforming, breaking out, and MPC yesterday cleared the 170 level. So it cleared 170 level. I trimmed half of the position. Next overhead resistance is 175. So obviously it's directly correlated to the risks in Middle East, and if US gets involved, then potentially oil prices continue to grind higher. For now, basically consolidation, right? And again, this is a barometer: risk on, escalation, oil prices going higher; risk off, crude oil is going down. For now, for the past 4 days, it's kind of grinding and still in downtrend. So long-term crude oil is still in downtrend. Short-term, it's overbought. So I think a lot of it will depend if United States will get involved in the Middle East. But for now, I trimmed half of the MPC position and Marathon Petroleum, and still have the second half. And if you follow the Zscaler trade software, right? Software security, right? Zscaler, CrowdStrike was another signal. In the past couple of days, they're all grinding higher. And especially with escalation in Middle East, cyber attacks, between Iran and Israel, and obviously now it's on the forefront, a lot of people, and Zscaler continues to grind higher. Any questions? You guys are quiet today. No questions? Okay. What else? Tesla. A lot of positioning at 300 level, right? If you look at and I think the flip point for Tesla is 300. So Tesla is well positioned. It was downgraded by Wells Fargo, lowering their 25, 26 earnings estimates. Stock is oversold. Gamma flip is at 300, right? So 300 is a majority of a lot of contracts, and 320, right? Those are the two levels that corresponds also to technical analysis, right? The 320 support and then 300. So those are the two supports, and right now it's kind of stuck in between these, rectangle, right? So you want Tesla to see above 320, at least for a few days. What else? Netflix looks strong. Meta looks strong. Microsoft looks strong. Google catch up. Apple catch up trade. NVDA. I still have NVIDIA position. I forgot about NVIDIA position. I mean, it's consolidating, trading sideways. Let's see how many positions. It's been a few weeks and NVIDIA is kind of just flat. I'm inclined to maybe, I don't have a lot of position. What do I have? I have 1, 2, 3, 4, 5, 6. No, I do have 7 positions. I'm going to close NVIDIA. I'm going to get out of the NVIDIA. So open on June 9th, 10 days is kind of not going anywhere. Obviously, if there's a positive reaction to the FOMC, I mean, I don't expect any new information from the FOMC, right? It's a dual mandate. Inflation is going down, unemployment is not going up. So Fed is not going to say anything new. If the Fed doesn't say anything new, right, and the United States does not get involved in the war in Middle East, I think at least my bias is to the upside, right? That we will resolve to the upside. So I do have few positions, like we talked about Zscaler, General Electric. So I'll keep those, but NVIDIA, I will close for now. So let's see, NVIDIA change 144.32, and I'd rather use news signals like MPC, Zscaler. These are recent news signals, and they're more likely to work. Okay, so I'm out of NVIDIA. Okay, so 1, 2, 3, 4, 5, 6. 6 positions. Okay, any questions about closing Intel? You have closing Intel. Tesla, thoughts on Boeing long term. I mean, Boeing is caught. I mean, let's look at Boeing. I mean, you have a flip point at 185, right? 186 strike. 190, 185. So 190. So it's 50-day moving average. So I think the 190 is well supported. Obviously, if you're looking for long term, I would look at the 1 month, or I would look at stock forecast toolbox. Let's see. I want to see if the model turned positive on Boeing long term. So long term, it's still weak trend, right? And what is the traditional technical analysis says? Yeah, so short term, obviously, it's a downtrend due to the unfortunate incident in the Indian airline. But medium term, long term, it's actually turning green. That does not coincide with our model. Our model basically says long term, it's still in downtrend. So I actually inclined to agree with the Tradespoon model, right? Our AI model. So long-term Boeing is still in downtrend, and you can see this trend line. So we need to clear, I mean, at least this level, right? Somewhere, let's see, where's the wall? So we have a lot of positioning at 200 level, 210. So the next level to clear is 210, right? Is that the call wall? Call wall is actually 220. Okay, so we need to clear 210 to 20 level, right? 210 to 20. So as long as the Boeing is below 220, I would be inclined to sell into the rallies. If we clear above 220 level, right, clear that call wall, then I think long term, I mean, next level would be 280, right? That's 2021 high, 2023 high. But again, you can say on the downside, worst case scenario, 70 points to the downside, but to the upside is 200 points. So risk versus reward long term, if you're thinking about quarters and years, then yeah, the risk reward tends to take the risk, but still, I would maybe decrease your exposure to Boeing and buy into pullbacks, because I think right now it's facing a lot of overhead resistance. Okay, John. I mean, I don't have a Boeing position. That's just my opinion. But but I think if I had Boeing position, I would reduce at this point. I would reduce my exposure, and then wait for a pullback. Thank you, John. Any other questions? Yeah, and if you want to, I mean, I would rely on these indicators too more, right? If you see a call wall, a lot of positioning at that level, we're approaching that level, right? To 10 to 20, then I'd rather just wait, right, and buy. Gamma flip is at 185, right? So then I'd rather buy at 185, 190, right? Because I mean that's 5% pullback, could be a 10% pullback. John, thank you. All right, John, very good. Any other questions? Bill, Ted, Peter, Patrick, Pam, Dr. Simon, Mario, Larissa, Kevin, John, Fred, David, Carol, Brian is back. Brian, welcome back. All right, any questions? All right, meanwhile, again, all eyes are FOMC decision today. Expectation, 2 interest rate cuts this year, 2 interest rate cuts next year, no activity during summer, kind of wait and see approach, and and that's it. If there is obviously negative surprise to that narrative or positive surprise to that narrative, the market will move. But the expectation, that Fed is behind the curveball and they're just kind of sitting and waiting until something happens. And then VIX is expiring today, so let's look at VIX. Let's see. mean, it's off the highs, right? So it's at 20 level, still elevated. We were at 20, 21. We're at 20 right now. QQQ slightly higher, spiders slightly higher, small caps slightly higher. So kind of everybody's waiting. And most important is SPX. SPX is glued to 6,000, right? Almost to the dollar. So basically, it's a wait and see approach. So this is the time to kind of just revisit your portfolio and just be comfortable with your exposure to the market, right? If you think you have too much exposure, I would reduce it. You know, if you think you have too little exposure, okay, maybe you can add. If you think, you know, Powell is not going to say anything new, and you know, the U.S. will not get involved in the war. What else? China looks like it's taking a break. So trade away from United States, that's on pause, right? We have a multi-week, I mean, higher highs in the dollar. Dollar continues to go higher. So the trade is overdone. Germany pulled back, Europe pulled back, Japan pulled back, Mexico pulled back. Well, actually, let's see. I didn't even check Mexico. Yeah, so that's a dollar trade, and you know, do you invest in the United States or do you invest outside of the United States? So that trade was overdone, pulled back. Probably continues this year. So maybe if you don't have any if all your exposure in the United States, maybe it makes sense to buy Germany or you know Mexico or Japan or basket of these countries. And July 9th is approaching, right? The deadline for the 90-day pause was, I think, Mexico and Canada, right? And doesn't look like Canada is cooperating. They do not want to be the 51st state. So that's another level of uncertainty that could, you know, escalate. So we'll see. Any other questions? 54. All right. Earnings. So let's look at the earnings. I think the only notable earnings on, well, tomorrow is the day off. Kroger, right? KR is announcing earnings on Friday. Let's see today. Anything today? Yeah, nothing is today. So I think Juneteenth, nothing. Friday. Yeah, Accenture and Kroger announcing, and a DRI, Darden Restaurant, CarMax. So a few announcements. Most of them are illiquid, but KR is actually more or less liquid. So 7 million shares, average volume. Let's look at the gamma, how people are positioning going into this event, and let's look at the expected move. All right. So June 20 before market open, expected move is based on historical volatility around 4%, based on implied volatility about 4 or 5%. So it could be a $70 stock or a $62 stock, depending on who's mixed bag, right? I mean, Kroger is not Costco, but you know, it's just let's look. I mean, Costco has been under pressure. Walmart has been under pressure. So they're pulling back. Dollar Tree is going higher, right? So fears of recession. So it looks like Dollar General, Dollar Tree are doing better than Costco and Walmart because people are more conscious about their spending. And you know, I think there's more like Costco than it is Dollar General. And you can see it's reflected in the price. Okay. So the question, do you want to be long volatility or short volatility, right? So you can sell Iron Condor if you don't think it's going to move beyond one standard deviation, then you can sell Iron Condor. If you have a strong opinion about upward or downward movement, then you can place a directional trade, right? We're here debating whether you should do butterflies or vertical spreads or single calls. I mean, any directional trades, I mean, you have to be correct in direction, right? And if you're correct in direction, all these trades behave similarly, just different risk versus reward parameters. Okay. Let's see, I think I'm in, so let's see how much, let's look at the spreads and see how much premium we can get. And let's see gamma. So flip point is 65 actually, exactly where it's trading. So that's not, so 60. So most of the positioning is 60 and 70, right? 60 and 70. So, and that's one standard deviation. So if you think it's going to stay within 60, 70 range, then you sell iron condor, right? You sell calls, or you buy iron condor, but you know, the idea is you sell in call spread and you sell in put spread because you think it's going to stay between 60 and 70 level. If you think we're going to break 70, then you can do directional trade. If you think it's going to break 60, you can take directional trade. You know, based on the positioning and volatility, you know, I'm more inclined that it will stay between 70 and 60. So now the question becomes, do you have enough premium to take the risk? So let's look at the 70 strike. Okay, let me look at my, let's see how much premium we can get from these trades. KR, vertical. Let's see. So you can sell 70, 72.5 spread, get 20 cents. You can do the same thing on put spread. So you'll get about 40 cents, 50 cents. So you're taking the risk, $2 risk, 40 cents. So about 20% return on your investment, right? On risk taken, you can get 20%, right? So Fred might say it's not enough. I say it probably is. All right, so 70. All right, so if I sell 70, 72.5 spread, all right, I can receive, let's try to get 18 cents, maybe 19 cents. Yeah, the spreads are not extremely tight, but okay. So I was able to get it for 17 cents. Let's see, can you see these trades? I assume you cannot. Power trade. All right, so KR is on the list. Orders, positions. Will it please show up in positions? Oh yeah, it is. Okay, fine. I don't know why orders don't work, but positions do work. Okay, so I sold 70 call, bought 72.5 call, right? I don't want to be naked calls in case I'm wrong, right? Not wrong, all right, in case KR has a very strong earnings and they move more than one standard deviation. Then my risk is basically $2.50 spread versus the premium I collect. So in this case, I collected 17 cents. And then we'll do KR, vertical. So this is iron condor, right? Market neutral strategy. The idea is that a stock will trade in the range after the earnings announcement, right? So then you do 2.5, 60, 57. So not much premium for 60. So looks like a little skew to the calls, maybe more call buying than put buying. Let's see if I do $5 spread, 60. Let's see. Yeah, so not much premium in the 60. So you have to sell 62.57, 62.57. Basically, with the idea that the 62 level will hold, right? 4 to 5%. Okay, so 62.57. Let me do custom. Okay, so if I sell 62 call, I can get 20 cents, and if I buy, the problem is they're not very liquid. They're not very liquid. 62. To 62.59. Credit. Let's see how much credit can I get. 62. Let's try 17 cents too. I actually was able to get 17 cents. Okay, so I have to come a little bit closer on the put side. Okay. So I sold 62 put for 22 cents, and I bought 59 put in case it has really bad earnings for 6 cents, right? So that's basically not even. There's kind of a broken wing butterfly. I mean, not butterfly, condor, but it's a $2.50 risk to the upside, $3 risk to the downside, and I was able to collect 45 cents. Any questions on this trade? How much, Kevin, cut today before Trump drops the bunker buster? Right, looks like Kevin already knows what the United States is going to do. So, I mean, my opinion is irrelevant, right? I think, Kevin, your opinion might not also move the market. It's just opinion what the majority of the people think, right? And at this point, I think it's impossible to predict, right? Obviously, if you think the war escalates, then you buy crude oil, right? The first thing that's going to move is crude oil. So if you think there will be escalation, you buy crude oil, right? If you think there's going to be de-escalation, then you sell crude oil, right? Or that simple as that. 60.59 put better. Fred, the problem with 60.59 put, if you can get a good price, because the problem is that the bid and ask is very wide. And that's a problem. And Kroger, I mean, it's still, what is it? What did I say? 5 million shares average volume? I mean, it has a decent volume, but still these out of the money options this bid and ask spread is pretty wide. So that's the problem. So, I mean, if you can get 10 cents on the dollar spread, then maybe, I got 17 cents on $3 spread. And again, recently the move to the downside has been 3 to 2%. I think Kroger, it's a good company, right? Well, has a good cash flow, done a lot of acquisitions. So, I mean, but again, consumers are going to Dollar General and Dollar Tree. I mean, I don't know how much groceries you can buy in those. Probably not a lot, right? So, I mean, there's not much alternative. Right? I mean, you could go to Walmart, right? But you can see the prices of Walmart is also down. So I'm not sure, right? So I would expect that there's no surprise to the upside or to the downside. It's risk versus reward, right? If you want a little bit more capital, then you have to risk more. If you want to risk less, then you get, less capital, less return. So it's just a question of, what your preference is. Any other questions? All right, so let me also place the trade in my account. All right, so okay. Questions? Okay. Okay. What else we have next week? More depending on what Trump goes all in. UCO, is that nuclear? Pro shares Ultra Bloomberg crude oil. Okay. Yeah. So that's you think there's escalation, so that makes complete sense. But check out the volume and dividend on SPX. Sell the 5 puts for a week and do well with S. Thank you, Fred. Okay. Yeah, my opinion is, it's a $5, $20 stock, sell and put spread. The problem is that something happens with this fund or some liquidity event, and you can have sharp moves to the up to the downside. So I like, obviously, dividend yield, sell and put makes sense, and it's obviously been in existence for a long time. So okay. I mean, I personally like the one that you gave me, or someone said, is this not leverage, right? A GPQ. I mean, GPQ pays you 12% dividend, and you can sell same thing, right? You can do your calls and puts. So, and I think it's more conservative, less risk, right? So, but all of these trades are similar, right? They're all similar. You're going to make money or you're going to lose money. Just a question of risk versus reward. All right. Thank you very much. Have a great day. Keith will be back at the closing bell. Just remember this expiration today. Looks like we have a small rally, right? Spiders recovered most of the losses. I mean, still kind of it's kind of trades in the range, right? 595 and 605. And we're right at the magic 600 level on SPX, SPY. So no new news. And so 1 p.m. Central, 2 p.m. Eastern. Keep an eye on Powell's speech. I think that's the next news to digest. KQI. Nasdaq high income ETF. Wow, 14%. Nice. Yeah, I mean, they're similar. Nice. Thank you. Thanks, Fred. All right, ladies and gentlemen, thank you very much. Have a great day, and I will see you, well, Friday morning. So Keith will do the closing bell today. Thanks a lot. And have a good, enjoy tomorrow, day off. Spend some quality time with friends and family.